Hello, everyone. Welcome back to the How to Trade Switch Markets community. We have a big-time breaking news event that just occurred during the U.S. overnight. I always say that, listen, during the weekends, during the times when the market is closed is when you see big-time news events. We got a bona fide big-time news event. We had the removal of Nicolás Maduro in Venezuela. This is something that I've been talking about for a long time on our live streams, and the potential implications of this action by the United States government against Maduro is a very, very big deal. There's a lot going on here. It's going to impact pretty much markets across the board. Today, I'm going to show you exactly what to look for on the U.S. oil, the UK oil, and some of the big stocks that are going to be involved in potentially rebuilding the Venezuela infrastructure designed to really export large amounts of crude oil. I've got a target for you for U.S. oil to the downside that's a very big deal. And it's going to be one of those that you've got to be very, very careful with. I think we could be going there. I think we may be getting there very quickly. So we've got some folks in the trading room here on YouTube. Yes, sir. Good to see you. Yes, sir. Welcome. Happy 2026. We're back at going eyes hazy. Good to see you. Yeah, this really is crazy. This was a big deal. A major military operation out of the United States against Venezuela occurred during the overnight. Now, most of you probably already know the news. Probably what you don't know is exactly how this is going to impact the markets. For me, this is going to be a big-time market driver for WTI crude oil. I'm going to show you a few things you need to watch for on Monday's open. It is very, very important that you listen up because it's a big-time action. It's going to be a big-time volatility. It's going to be something that really is unprecedented in a lot of ways. So definitely, if you want to trade the action, be sure to check out Switch Markets if you're in a municipality that is supported. Thousands of global markets, all of your oil markets, your metal markets, whatever you need. Switch is an up-and-coming broker. Big things on the horizon for 2026. So if you're interested in trading that, you definitely want to be involved in the markets with a good broker. Switch can get you up and running. Okay, here's the deal. Now, Monday's electronic open for U.S. oil is going to be huge. We don't know where the market is going to open. It's very important that everybody understands that. Just because we closed yesterday, U.S. oil closed at 57.32, doesn't mean you're going to open at 57.32. We could definitely see a big-time gap up or down. Now, I say up because the initial place could be to the top side. We are looking for a very big bearish market bias. I'm looking for the downside of this market to develop really heavily in the next 6 weeks. I think that we've got a real opportunity here to trade U.S. oil, but I don't believe Monday's the day to do it. I would stay out. Personally, I'm staying out Monday. I want to see where this market opens tomorrow, and I want to see exactly what happens when those initial traders arrive at their desks for the New York session. A lot going on. A lot of people are back from the holidays, the winter break. There's going to be a tremendous amount of volatility and volume on Monday. Be very, very careful if you're a retail trader. I cannot stress this enough. Be very, very, very careful. Lewis, Shane, Happy New Year. Good to see you, Lewis. Welcome. Sort of a Saturday edition, an impromptu breaking news edition, but there's a couple things I feel like we've got to cover before you guys get into your trading next week. Now, the big thing that I really want to stress is it's going to be all about the futures markets on Monday. This is crude oil futures. This is over at the CME Group. There's a few things that most people aren't going to tell you to watch, but if you're a serious crude oil trader or even if you're a beginner, you need to be aware of this. WTI crude oil futures, that's the contract that we're looking at here for the CME Group. Now, you'll see that we closed that front month contract. What is that? Which one is that? It doesn't matter. It's the front month, so that's where the volume is. The last was 57.33. That's where we closed yesterday. That's where your U.S. oil CFD closed, 57.33. Your quotes, what we're watching for tomorrow is going to be very, very key. We're looking for volume. Now, that's going to be the February. All right, it's February crude right there, 166,000. That volume on February crude is probably going to be doubled or maybe even tripled on Monday. That means we could be in for a big directional move. But here's what they're not going to tell you on the news. These deferred month contracts are going to see a lot of volume as well. We're talking June, we're talking May, we're talking July, we're talking August. Institutions are going to make their plays on those deferred month contracts. Be ready for some of these deferred months to see a lot of shorts come into the market. The reason why is because you're going to see more oil coming out of Venezuela, and judging by what Trump said today, cover in a minute, it's going to be coming to the United States, and it's going to be via oil companies that are major conglomerates. They're going to get that oil out of Venezuela quick and on the global markets. That doesn't necessarily impact the price of crude right this minute in February. It's not necessarily going to impact that, but down the line, May, June, July. Look out below. Those could be some major sell-offs, so be very, very careful. Joshua Chung, good to see you. Joshua, welcome. This is a big deal. Watch this very closely. Watch July, June. We're looking for volumes to come in on these contracts. That's what I'm going to be focused on really on tomorrow's open, Sunday afternoon's U.S. Open. So let's go ahead and get out to the charts. I'll give you the levels right now that I'm looking at. This is the U.S. oil chart. 2025's low is right there at 54.98. Okay, that's a big deal, right around 55. Now, the question is where do we open for trade? Now, remember, when the markets are closed, you have institutional traders and exchange people, liquidity providers. They're all negotiating what price this thing should open at. Now, it's not going to open at 57.32. In my view, you're going to see price probably open down a little bit. Now, that doesn't mean that it's going to stay there, and it could definitely open higher as well. I don't know which way price is going to go Monday. I'm just telling you from a bearish perspective, this could be a big-time bearish market driver for U.S. oil, and it probably is going to develop over the next 6 weeks. We'll have it every step of the way for you. Really, it's anyone's guess what happens on tomorrow's open. Now, there's been a lot of talk about the United States staying there and running the country, running Venezuela. If, in fact, the United States starts taking casualties in this thing, they talked about the potentiality of a second wave going into Venezuela, then U.S. oil, if it looks like it's going to be bogged down in a quagmire and the United States starts taking casualties, or if there's an occupational force there, you could see oil just absolutely jam up in here. The next 36 hours, 24 hours especially, but the next 36 are going to be big for this military action. If it's over, Maduro's gone, and now the rebuilding process begins without violence, you can really build a case for the bearish side of the U.S. oil market. But if it's not, if it's the other way, if you see some major incursions, major stories coming out of there, United States taking casualties, kinetic exchanges between both sides, and maybe a formal opposition in Venezuela, you've got to watch out. You've got to watch out to the top sides. That is why I'm firmly on the sidelines here. I'm going to let this thing simmer through the Monday session and then come back guns blazing Tuesday, ready to trade the price action. Now, 2025's low, right around 55. Be careful there. I'm looking for a big washout beneath that level eventually if it gets hit. If we do see price open down in here, then we've got to have some more long-term levels for U.S. oil. So there's a couple that I'm looking at. Now, this is a chart that you're not going to find probably anywhere else in the world. And people that aren't hip to the crude oil markets, that don't really understand what the energy is and how it's traded, aren't going to agree with this. But I'm telling you for a fact that the all-time low of this market was not zero. It was not zero. It was not 1 cent. It was negative $40, and that developed back during the COVID era, the April sell-off that was right after that March 2020 COVID outbreak. So when I'm building Fibonacci's, and this is my tool of choice, I am right down there at negative 40, and I'm going right up to those spike highs that developed during the March of 2022, sort of Russia-Ukraine, a lot of escalation there. Those spike highs right up around 129. All right, 38%. I've harped on this level forever. That 64.25 to 65 level. I've been over and over and over and over that. That is the big level. That is gone now. Forget that. Unless we see some kinetic exchanges and price established back up here, then we can start talking about a bullish bias. Right now, it is bearish, bearish, bearish. The 50% level, probably the next port of call, 44.39. I'm looking for $45 crude. I'm looking for $42 crude, and I'm looking for it going into the spring months. That could be absolutely huge. Now, does it happen right this minute? No, it doesn't. You won't see a plunge down there right away. It's going to take some time. But once that infrastructure is established and we're going to see the crude oil get exported out of Venezuela, even if it's just dumped on the global market, you're going to see a tremendous amount of bearish price action and really, really force the price of crude down south. So 44.39, circle that. Now, 24.39. Is that even possible? Probably not. I don't see $25 crude oil. That was the height of the COVID breakout, the global shutdown, no demand at all. I don't see us going down that low. But for once, I'm looking at that 50% level of that range right there, $44.50, $44.75, maybe $45. You guys heard it here first. That more than likely is going to come into play. Now, if it doesn't, that typically means that you've got a war. You've got a kinetic exchange, and Venezuela actually is going to have a prolonged battle down there. If that happens, then we're going to be looking at the bullish side of this. That's why I really recommend holding your water. Don't jump in right now. You don't need to. Now, $50. You guys know me. A lot of you in the live chat, you guys know me. You know exactly what I think of big round numbers. They're absolutely imperative that you understand where they're at on the map. $50 is absolutely huge. $50, you're going to see some two-way action there. Now, if we open bearish on Monday, we could see 50. We could see 50, and we could see it as early as Monday, Tuesday, Wednesday. Now, it depends on how this develops, but from what I heard today in the news and what I heard from Trump during his big address was you're going to see the major oil companies of the world move in. They're going to rebuild infrastructure. They're going to get the oil flowing in a big way, and a lot of that's going to come to the United States, and a lot of it's going to go globally. That's a bearish market driver. That's something that hasn't been online in a long, long time. You could be looking very seriously at $45 to $50 crude. I think 44. I'm looking for a big washout of the bulls under 50. If and when that develops, you guys will be the first one to know. Join our live streams, that's for sure. Let me see. Yes, sir. It's oil. You know, the U.S. trying to sneak their way in. Well, I mean, there was no sneaking. I mean, there was a lot of saber rattling here for months. We've been covering this story for months and months. And finally, we saw what exactly we expected. And I expected it last month, but it came really to start the new year. The oil will be flowing out of there one way or another now. That's a bearish market driver, no question about it. This is a game changer. Ice Hazy, can we expect a statement from China and OPEC? Absolutely. They may already be out there. We'll be covering those Monday. If this situation escalates, I'll come back live maybe later today or tomorrow to keep everybody in the know. But you will hear something out of OPEC. This will put pressure on OPEC. No question about it. You will see OPEC. They're going to be under pressure. All of a sudden, the Mideast oil, how about what's going on in the Emirates and Qatar? All of these markets are theoretically opening their doors to the West, to direct exports to the West in more of an unfettered fashion than we've seen in years and years and years. And what just happened? You may have a new Saudi Arabia here in the Western Hemisphere. I can't stress how big of a deal this is to the oil markets. This is one of those that should make you happy to be a trader. As an energies trader, I'm grinning ear to ear because I know opportunities are going to be there for us. We just have to be smart about what we do. And I know if you're following one of my live streams and you're in the Switch Markets How to Trade community, then you know exactly what I'm talking about. You'll be able to navigate this without any problem at all. We'll be on it every single day. So yes, absolutely, guys. You're going to see a statement. The Chinese delegation was in Venezuela making a deal supposedly to support Maduro when these strikes came. I'm seeing reports of that all over the place. This was a bold, bold move. Very, very surprising. This is the second time in the new Trump administration where a military operation of a very large scope has been a complete secret. There's no secrets in the United States. There's no secrets in the world anymore. This was a secret. This caught everybody by surprise, and that's why our markets are going to react. All right, let's get back over to the oil. Let's go. UK oil. Now, a lot of you that are in the UK, a lot of you that are abroad in the international, what I would call the international marketplace, you probably focus more on UK oil. It's likely to be very similar. Now, as far as having that COVID low for UK oil, I'm not privy to it. I don't really trade UK oil. I watch it. There's a bit of a correlation between US and UK oil. But what I would definitely be focused on right here, especially if you're trading short-term UK oil CFDs or UK oil futures, Brent crude, North Sea Brent is the actual contract. You're looking at a double bottom that formed back in 2025 in April and in May. And those lows are at 58.44 and at 58.74. We had a hard test of that in December. That low was at 58.72. Be ready for that level to give way. Now, if this does give way, more than likely, you're going to see a major washout probably down to 55. If you get that out of UK oil, you're going to be down in the 40s for US oil. Big time to be an oil trader. If we're patient and we can position ourselves correctly, these could be really, really enticing markets. Now, I have no problem scalping these to the long. My positions, my bias right now has shifted towards a major bearish bias, at least for the next 6 weeks. But I've got to see what happens Monday before we jump in and start trading, because there's a chance that these oil markets will open higher to flush out all the retail short squeeze essentially, before they continue down. So if you're trading UK oil, be careful there. Be careful around that zone. The bidders dug in December and really defended that yearly low. That is the yearly low. Be watching that. That is where your big bearish breakout will sort of originate. Probably compression, and then a break. That would be my guess. We're watching closely early in the week, though. We could be completely wrong. You might see the market open way up here. I highly doubt that unless there is kinetic exchanges in Venezuela and the United States launches a full ground invasion and starts taking casualties, then you'll see a tremendous bullish run in oil. I don't think anybody believes that's going to happen right now. Maduro's gone. My guess is the inner circle probably crumbling, probably a lot of offers on the table to get people to leave peacefully. I imagine all that's in play. Fascinating time to be in the markets. Okay, so the next thing we have to remember here is that it's not just about commodities. It's not just about crude oil. Stocks and stock market's going to open in a big, big way on Monday. Now, is this a bullish or bearish market driver for U.S. equities? The promise of cheaper energy for a prolonged period, coupled with our rate cut projections for 2026, I'll cover all that Monday, really spells towards an extreme bullish run in U.S. stocks. Now, as far as what I would do Monday, I would probably be on the sidelines waiting for things to set up a little bit. But some of the stocks that we're going to be looking at, as mentioned today in the address, was the biggest oil companies in the world are going to go build infrastructure, and they're going to get the oil online from Venezuela. Okay. Who are they? Well, we've got ExxonMobil, Chevron, ConocoPhillips. Occidental Petroleum's one that I'm watching with the 920 EMA crossover. I'm going to show you that right now. Occidental Petroleum, Marathon, and Phillips 66. You're also going to see international vendors are going to be able to get involved. Things like British Petroleum, BP, also Hess. Don't forget Hess. They left Hess out of that list. Hess is going to be a major player down there. How about Halliburton? You're going to need oil field services. Halliburton's probably already mobilizing, getting ready to set up camp in Venezuela. There's a lot going on. I'm not going to see a Shane in the weekend. Yeah, this is big news. So we're looking at not only at WTI crude oil, but we're also looking at your markets, at your stock markets, and individual stocks. So let's go ahead and have a look. Yeah, here's a good look at Chevron. This is the Chevron Corporation, one of the biggest ones in the world. Did somebody at Chevron know this was coming? Maybe. What do you think happens to Chevron stock? ExxonMobil stock, ConocoPhillips, Occidental, OEG, Hess. These are the big players in the oil fields. Halliburton. Does their stock rise? For the companies that get a foothold and get the big contracts in that country, absolutely. That's going to develop market share for the next time's always tough because politics really dictates what happens in the energy industry, but you could definitely see some rallies. So right here, you can see the big move north here for Chevron, a company that's just been all over the place. Not really one that I'm watching, but they could definitely get a piece of the action, and I would be surprised if they don't. But really what you've had with Chevron stock going back to sort of that post-COVID era, that right there tells you everything you need to know. 189 is sort of your highs, coincided with those $129 crude oil prices. So right there, you have sort of a correlation. Okay, as the price of crude goes up, what happens to something like Chevron, which is a refiner, which makes gasoline? Okay, it makes the gasoline more expensive and the margins better. Is this going to be a bullish or bearish company? You're a refiner, probably going to send a little bit of bearish price action, especially if crude oil is cheaper. That means the price of gasoline is going to come down. All of a sudden, there's going to be a lot of crude oil on the market. The refiners are going to be able to produce at whatever rate that they'd like. The demand for gasoline is pretty much static and robust. I don't think that the margins are going to look really great for somebody like a Chevron. But how about like a Hess? Here's Hess Midstream LP. This is the version of Hess stock traded on the NYSE. Long story there. But what you have here is really a bearish market for Hess. Hess is one of the biggest players in the oil field in the world. You could definitely see a bullish run if Hess gets some of the rights to develop that infrastructure in Venezuela. That's key. Occidental's one that I'm watching. Now, here's a daily look at an Occidental chart with our 920 EMA crossover, and you can see, wow, you got a bullish buy right there. You got a bullish buy yesterday that developed. Did somebody at Occidental know that these strikes were coming? And is Occidental in a position maybe to get some of those contracts? I have no idea. I don't know anybody at Occidental. But I do know that this stock right here, is it a buy or a sell? 920 daily EMA crossover, big time news event. There could be a lot of good news for Occidental coming. That could be a potential swing low buy that could be really lucrative to the top side. If you take a look at the longer term charts, you go to the monthly, I mean, you could see there is a lot of room to recover here for Occidental. There's going to be bidders there. There's going to be bidders there. The only real question is when they come. Do they come Monday, or do we wait to see how some of these contracts get awarded? Last one that I'm going to cover today is going to be Halliburton. Now, Halliburton's a company that I did work for about a very short period of time in 2013. Nice folks. Huge operation, though. You'll notice that Halliburton spiked yesterday as well. You're up about 5%. Now you're trading $29.60. Just a little bit of full disclosure. Back when I worked for, back when I worked for Halliburton, it was a long time ago. And like I said, it was a very, very short stint, but it was back here. Prices were right up in here. It's been 2013. This right in here, there was folks making more on their stock options than they were on their salaries. You can see the big run up there. That was when there was a big buzz around North American fracking and bringing crude oil to the masses via fracking. And since then, it's been sort of a tough row to hoe for Halliburton. We saw the absolute panic lows. I was involved in this trading back then, about $4.25. I was buying Halliburton at $6 and $7. I thought it was an absolutely fantastic bid, and it was. It was a great bid. Turned out to be very nice short-term plays. And now what do we start to see happening? We see Halliburton sort of had a positive month. Who do you think is going to be the oil service company that gets a lot of the contracts down there in Venezuela? It very well could be Halliburton, because they have the capacity to send the manpower down there to get the rigs online. Not necessarily the rigs, but all the support services that you need to drill. Typically, Halliburton supports that. Be watching Halliburton closely. Now, it could be because of Halliburton's affiliation with the Bush and Cheney, sort of their faction, not necessarily friends to Trump. Halliburton may get cut out of a lot of these. These will be contracts that are awarded by the U.S. government to these companies to go down and build that infrastructure. There are going to be billions and billions and billions of dollars there to get the oil flowing. We saw the initial step of what could be a major shift in the global energy complex, and it started with removing the sitting leader. In my view, this is one of the biggest market drivers I've seen really since the Arab Spring of 2011. That's the way that I see it. That's why I'm giddy and I'm excited. All right, guys, I'll take a few questions, and then I'm going to go ahead and sign off here. This was all about oil, just sort of a breaking news event. Let's see. Ahmed, silver seems got a good run this week with this news. Silver is off the charts, 72. We're trading 72s. If you look at the silver market, we covered it yesterday. You can see there's my analysis. I had to get the telestrator out and draw some pictures, but realistically, for me, silver is very straightforward. You want to bid it if you get a chance. I absolutely love that spike low right there to that top side right there and 62.50-ish. That's hot. If we could get a pullback down in there, we are in fantastic shape. We may get it. This may be the catalyst to say, yeah, well, Venezuela also has a lot of silver. Who knows? Who knows what's going to happen? I want to bid silver, and there's no question about it. I just don't really want to buy it from 72, especially on a derivatives trade where we could really get forced out of there with our leverage. I want to make sure that that's not the case. Gold. Everybody likes gold. I might as well just cover it right now. We had a fantastic level for you yesterday. It looks to me like it's going to be a very, very good one. There was sort of your weekly and the analytics. Love my weekly chart. You guys tune in. I always have weekly levels and weekly numbers for you. This right here, 4,500 and 4,550. Those are the two top side resistance zones I would watch very, very closely in gold. 2025's high, 4,550. 45, big round number. Likely to see sellers up there. If you see sellers, you kind of got to get out of the way till that level shakes out, and we can bid this thing up to the next port of call, which is what? 5,000. 47.50, there'll be a hiccup there, then 5,000. I love that trade. It just isn't the time to take it. I don't think so. We have to wait to see what happens here. We just don't know. Venezuela also had a tremendous amount of gold. A lot of those gold reserves were believed to be sent to places like Russia and China. We do not know. You will be finding that out if the United States stays on the ground in Venezuela for any length of time. I guarantee there's one eye on the gold inventories, there's one eye on the oil, and the other is on the people and the politics and stabilizing the region. Right there, 4,300. I talked about that yesterday. Being an absolutely huge banger. We got the low there and then the bounce, sort of the inverted hammer. I would be watching this closely. I think this level is going to be challenged on Monday, but you've got to stay out of the way. There's going to be a lot going on in gold as well. We just don't really know which way these things are going to break. It'll take probably a good 8 hours to watch this price action set up before we have a real good shot at trading the U.S. Open with some confidence. Let me see. Let me see, Lebo, unrelated topic. What movies and series would you recommend for traders? Let me see. I got a bunch of questions there. Yeah, we'll cover Bitcoin here in a second. Signal, actually. Let's go to Bitcoin right here, and then I'll take a few of these questions. Let's see. What happened to Montana? We lost. We turned the ball over. We played pretty clean against Montana State. We had some bad officiating, and Montana State's just pretty good. I thought we had it. We rallied from being down 3 scores, came back, took the lead late in the third, and ended up losing in the fourth. Broke my heart, Jason. Broke my heart. I'm just now getting over it. That's for sure. Let me see. You're absolutely welcome, Ahmed. Lebo, unrelated topic. What movies and series would you recommend for traders? There's a movie out on YouTube. It's absolutely free. Check it out. It's called Into the Pit. Just Google Into the Pit or go to YouTube and just type Into the Pit movie, and it shows you sort of a profile of 5 pit traders and goes through sort of their life and it shows talks to them, interviews them. It's like a documentary. That's a great one. That's the one I always point to. And then if you want to have some fun, you can always watch things like Wolf of Wall Street. There was a real good one that was about Nick Leeson and when he broke, bearings? One of the banks, one of the big investment houses, Rogue Trader with Ewan McGregor. That one came back out in the 90s. You could check that one out. That one's pretty good. And, of course, my favorite's got to be Wall Street. Wall Street 1 is the best, in my view. That's what I grew up watching when I was a kid. And then Wall Street 2 is not bad either. Talks about the meltdown in 2008. Great movie with Michael Douglas. Very good movie. So that's what I would recommend. And then as far as the series goes, just check out our live streams. Let me see. Thanks, man. That was a pretty fair analysis given none of us actually know the future. Yeah, I mean, we just don't know. Right now it's all about kinetic exchanges in Venezuela. No question about it. It's all about kinetic. If it looks like it's going to be a fight, if you start to see the United States putting a big occupational force in there, if it starts to look like in Iraq, that's going to be a different animal. Let me see. Ice Hayes, a US 30. Sure, I'll pull a US 30 chart. We'll pull Bitcoin and then US 30, and that'll be Iraq. Let me see. Vids and things. About the recent Euro USD signal, what stop loss would you use? I can't really tell you exactly where to put your targets and stop losses, Vids. I'm not a financial advisor, although I probably could be one. All you have to do is go get certified. It doesn't take very long. But as far as where my stop loss would be, I typically approach those trade ideas with a 1-to-1 risk versus reward ratio. So if I'm looking to make 30 or 40 pips on a trade, then I'm only going to risk 30 or 40 pips. That's it. That's a lot different than most of the signal providers out there that are. I'm learning. I get to talk to a lot of you guys in one-on-one meetings now, and a lot of folks that I've talked to are buying signals, and the people are telling them to scale into positions and add to losing positions, and that stuff's really a challenge. So I stick 1-to-1, and I do that because I like to win. And I also know that a 50% win rate keeps me at break even. And if I hit 60 or 70%, that means that we're making some serious coin with a fat edge. 10 to 20% edge is no joke. So that's what I look to do. That's my own personality, though. Yours may be completely different. Don't risk more than the next level. That's what I would recommend. All right, let me see. Steven, I thought China already made a statement. I'm sure they did, Steven. I've been going 50 directions today, so I probably missed it. US 30. Okay, let's look at Bitcoin and the US 30, and then we'll call it a day. Here's your Bitcoin chart. I love Bitcoin to the top side. I love crypto to the top side. I talked a lot about altcoins yesterday and a few things that I'm looking at for the new year. When we start talking about Bitcoin, there's a lot to be said here for the bullish side of this market. There really is. And this was sort of the sequence that I was using really throughout the fall months. This was your April low right up there to your October high. And that essentially, that's a good look at your yearly range. That's 2025's range. There's your low, there's your high. So there's your pullback. We broke beneath 38%. We broke beneath 62%. Great scalping on those levels. But when they finally gave way, we saw the major correction in November. December, very tight month. Shouldn't surprise anybody. As a general rule, rich folks go on vacation in the wintertime, especially right between Thanksgiving and Christmas. That shouldn't surprise anybody. So the big money is the big money in the Bitcoin market. Not yet, but it will be. Right there, 78% was my big-time level, 85.5, and now you can start to see that rally up right around 90. Definitely looking at the top side of that with ruthless aggression, I think. That's what I would call it. So I'm definitely watching that closely. I love 85.5 as downside support. The last year's low, 75, interesting. This area right here, this 80 level, we sort of saw the big sell-off and then reestablished. Now you got the compression. If we break to the downside, and it's possible, anything's possible, more than likely, you're going to be looking at 75. 75 is probably an institutional buy. So, I like it. Do I like it from 90 right now? Maybe for a trade, betting that it goes back up to 100. I would wait, though. I would have the brakes on with Bitcoin. I want to see some trading. I want to see some real trading next week before we start diving in and making all these calls. Because if we just guess, then we're just guessing, and that doesn't do anybody any good. I've got my levels. I know 85.5 is a big deal. If you break beneath that and then trade beneath December's low, odds are you're going to take out that yearly low, which is down there. It's not the yearly low, but it's going to be that sort of spike low down there right at 80. Odds are you're going to break and make a run at 75, and that's probably where we get the knife and the fork. We put the bib on, and we look to buy Bitcoin with a little bit of conviction. We're not there yet. All right, let's take a look at the US 30, and then I'll go ahead and call it a day here. I'll call it an abbreviated Saturday session. I want to thank everybody for joining me on no notice. We didn't really have any notice at all because we don't really know when these things are going to happen. Okay, the US 30, let's keep it simple. Don't reinvent the wheel to start the year. We don't need to get technical into VWAPs and parabolic curves and all that jazz. You don't need to do any of that. All you need to do is say, okay, what do you got here? We've got some key levels in play. 50,000 is the biggest level on the board. No question about it. 50,000 for the Dow is a big one. So we're thinking that we're probably going to test that zone in short order, probably by the end of this month. If I had to bet, I would say we go up, we sort of test this zone, and then we either break down, maybe get a bit of a correction in, or we go higher. The problem with trying to project this market to the short side is that you've got interest rate cuts, potentially, probably not coming in January, but maybe the next meeting, probably a couple of cuts there. And you've also got potentially lower oil prices. Now, nothing's a guarantee in this world. I could be completely wrong today. I don't think so, though. So if we get the low energy prices and the rate cuts, you're going to take the restrictor plates off of U.S. equities, and you're going to see these things rise to heights that you couldn't even imagine. And that's a real possibility. The other possibility is you get a stubborn Fed that keeps interest rates high, all right? Maybe inflation persists. Maybe the economy goes through a downturn. Maybe this exchange in Venezuela gets out of control. And then you're going to see a bearish price action for U.S. stocks. Where this thing opens on Monday, no clue. I have no clue, guys. No idea. In any case, right there, you can see what we're looking at. If we do get a big pullback, I mean, you'd absolutely love to buy in on a big retracement level. I just don't think we're going to get it. I really don't. But if you see something down around 44, maybe at the end of Q1 or something, going into Q2, we'll have a real opportunity there to make a little bit of money. Now, as far as trading this right now, I would be very careful. I wouldn't be doing it, to be honest with you. I would wait. But you can see right here, you've sort of got this area. We've got a nice big move yesterday, but really low volume, limited liquidity going back to these days, probably the 16th, somewhere around the 16th of December is really the last days that you had some big volume. So if I'm looking at this US 30, I'm going right here to my weekly chart, something like this. More than likely, this would be my pullback bid, at least a downside support zone, somewhere right around last week's low. 47,680, maybe 47,7. That could be really a juicy level to step up and bid. So definitely want to keep an eye on that. I think that you're in an interesting type of a zone. We're in wait and see mode, though. We don't know where these markets are going to open. I cannot stress that enough. All right, everybody, I'm going to go ahead and sign off for right this minute. It's been a good stream. I want to thank you all for joining me on No Notice. Let me see. I got a couple comments here. Steven, the next Fed chair will slam down rates. I agree. We covered the interest rate expectations yesterday. The Gaussian curve only had them coming down like a half point. That's not going to happen. I think the next Fed chief is going to be definitely going to want to play ball with the lower interest rates. I predicted next December at that last meeting, you're going to see the prime rate somewhere right around 2.25. That would be my guess. And it's probably going to be a pretty good one. So I like your read. I think they're going to slam interest rates down in a big way. Powell is gone in May. I got a feeling Powell may be gone sooner, Stephen, but I called it last year and he didn't step down. But we're definitely watching Jerome Powell and seeing what he's going to do in his post-Fed life. I think he's probably already arranging his next gig, that's for sure. Lebo, how much capital do I need to trade at an institutional level? Hundreds of millions of dollars. That's why I say institutions. You don't have it. Nobody has it. I'm talking like hedge funds. I'm talking companies, hedge funds, pension funds, governments. Don't worry about it. Institutional level, nah, you don't want that. Those guys are under a lot of pressure too. I mean, they have to trade. They have to make sure the money generates consistent returns, or else they really run into problems with shareholders, with pension holders, with all those folks. So, yeah, a lot of us want to be institutional traders, but there's a lot of advantages just to be in retail and being able to make a few bucks here and there. And believe me, it adds up. It adds up. Let me see. Vids, best Forex oil gold info on YouTube. Thanks, Vids. I appreciate it. That's for sure. All right. Great stream. Absolutely, Lewis. You're welcome. Okay, guys. Biggest thing to watch tomorrow. It's going to be a violent open on the futures markets. Be careful. Be careful. Be careful. U.S. oil, don't know where it's going to open. No clue. Gold is going to be volatile. Silver, going to be volatile. UK oil, volatile. I didn't even talk about natural gas. Natural gas is going to be volatile. So watch those very closely. U.S. index futures, they're also going to see some action there, so be careful there. I'm not expecting absolute trend days out of equities, though. I think people are going to sit back and they're going to say, okay, what the hell does this really mean? I don't know. We're going to find out, though. All right, everybody, thank you very much for joining me. Have a fantastic weekend. Get away from this stuff for a little bit, and we will catch you on Monday. As always, trade the action well, and we'll talk soon. See ya.